Good afternoon. Hi, everyone. Welcome to our afternoon breakout session. My name is Monica Copeland. I'll be moderating today's event. As part of it, I'm going to start by sharing my screen so you can see a few slides, but then we'll begin. Hold on one second. All right, so I hope you can see my screen. Just to check if you guys are in the right breakout session, this is the one for small and MDI credit unions and how they leverage capital to grow. We're very excited about this session. Again, my name is Monica Copeland. I'm a senior program officer at Inclusiv. I manage a program called Inclusive Black Communities, and that's an initiative where we've been providing technical assistance and capacity building support to minority depository institutions, and particularly credit unions that are led by and serving African Americans. So we have a jam-packed session. It's going to be great. Really excited. But before we begin, a few housekeeping items. One, we're encouraging everybody during the breakout sessions to turn on your cameras if possible. It just makes for a friendlier environment, and hopefully during the Q&A it'll become very interactive. So just feel free if you can to share your video. And throughout the session, we're encouraging you to type your questions or comments in the chat. We will have a place at the end of our panel to take questions, but you can type your questions at any time. If you're having any tech difficulties, please contact emsupport@advancednetlabs.org. And the speaker bios, you've heard several times, they're available on Inclusiv's website, but feel free to visit them afterwards if you'd like to learn more about our speakers. Our social media handle, for those who need it or haven't checked it out yet, it's at Inclusiv CDCUs, and the hashtag is CDCUCon 2021. And this recording will be available on Inclusiv's YouTube channel by October 11th. As part of our opening remarks, we will have some comments shared by one of our conference sponsors, Citi. We'll also have a facilitated discussion, which will involve a panel of credit union CEOs who are all running and managing and operating small and minority depository institutions, two who are in urban areas and one that's in a more rural area. And then again, we'll have this interactive portion for audience Q&A. But at this time, I'm going to turn it over to Barlow Flores. He's the Senior Vice President and also the Community Relations Northeast Leader for Citi Community Investing and Development. So Barlow, if you'd like to say a few words, feel free. Barlow, are you able to unmute or make any comments? All right, well, we'll come back to that part. Again, we have this session on small and MDI credit unions. The idea is that you've been hearing a lot throughout this conference about the importance of becoming CDFI certified, and you may have noticed that there were large influx of capital and funds available for all credit unions, but particularly those that are CDFI certified. And we've invited 3 of our credit union members. We have Mr. Gregg Brown, who's the founding president and CEO of Southside Community Federal Credit Union. We have Ms. Suzette Cowell, she's the CEO and treasurer of Toledo Urban Federal Credit Union, and Kimberly Nichols, she's the CEO of Bridgeway Credit Union, which was formerly known as Phoenix Pride. So thank you to them for being here. Again, their bios are available on the website. These professionals are well-versed in accessing these forms of federal funds and just deep partnerships, and so we wanted you to have a chance to hear from them. And just knowing that they're small, all of them are under $25 million, they're doing some remarkable work, and so we wanted to kind of demystify some of that for some of our fellow small credit unions out there who may feel like, how can you do it, why should I, if you have any reservations about taking advantage of the federal funds and partnerships, or just, wanting to know some of the nuts and bolts of it. So we wanted to bring them here to share their stories, and then you'll have a chance to ask them questions. So I am going to stop sharing my screen, but I am going to ask Mr. Gregg Brown if you want to kick us off by telling us a little bit about your credit union. and how you've been able to access some of the federal funds and partnerships. And Greg, I think you're still muted.
Oh, there it is. Yes, Southside Community Federal Credit Union, located in Chicago, Illinois. Well, we were chartered in 2003 as a low-income designated credit union. We are an MDI, a CDFI, and an SBA approved lender. We offer a HUD-approved housing counseling program and an 8-week financial education curriculum that is taught throughout the year. Our mission is to equalize economic power and fight poverty by improving financial education and providing access to credit and savings services for our members. We have approximately 2,000 members with 7.1 million in assets. Our field of membership covers some of the most undercapitalized and asset depleted neighborhoods on Chicago's South Side. We're now one of the only community-owned and operated financial institutions serving the African-American community in the state of Illinois. I would like to add that we have been a proud member of Inclusiv since our inception over 17 years ago. And this organization actually helped us to open our doors, have provided technical assistance, as well as grant funding and secondary capital that has enabled us to remain viable. As a matter of fact, Inclusiv helped us to get certified as a CDFI. And I can't underemphasize the value of that certification, not only because it allows us access to financial resources that can help to build the capacity of our credit unions to better serve our members, but it adds credibility to our credit unions and our ability to leverage resources from other funding sources. For example, we've been able to, we have a list of regular funders from banks that are seeking credit from CRA that support our work. We got our first grant from the Catholic Campaign for Human Development. They have local grants and national grants. So for 3 years, when we first started, we were approved for grant funding from them. And then a few years later, we were able to participate in their national funding program, which enabled us to access more resources. And one of the challenges, of course, that many of our credit unions face that are serving low-income communities is capacity, building capacity to be self-sufficient. So to a large degree, we are still reliant on grant funding until we are able to deploy more capital in the form of loans to our members to generate enough interest income to grow. We were recently awarded the CDFI RRP grant for $987,000 within the last couple of months. It is a little too early to report on the impact it has had, but I can assure you that for us, it is a game changer. We also submitted an application to the Treasury Department for the Emergency Capital Investment Program for secondary capital. So we're optimistic about that as well, and what it would mean to our long-term growth and sustainability. Also, we have been very fortunate to have partners to help us. We have a great relationship with the Illinois Credit Union League, as I mentioned, with Inclusiv, and even Citi. I know we'll hear from Barlow a little later in the program, but Citi was actually instrumental in helping to fund a number of nonprofit organizations that we were a part of with the Chicago Credit Builder Alliance, where we were helping, it was a coalition of nonprofit organizations that helped people to receive credit counseling and access to secure credit cards. So it's a pilot And then Citi recently funded Inclusiv in a pilot for growth and sustainability that we participated with a organization here in Chicago called the Faith-Based Credit Union Alliance, which is about 20 churches that have credit unions that work together. And so we were funded in a pilot by Citi through Inclusiv to focus on growth and sustainability, and that has really helped us. And what we've learned from that, we're continuing to implement even today. And one other thing that Citi did, they have a program called the Citi Community ATM Network. And what that is our members now can access all of the Citi ATM branch locations, ATM machines, surcharge free. So we were part of the co-op network. So we were able to, our members could do surcharge free transactions within the co-op network. But that relationship has also opened the door for our members to have greater access to their funds nationwide, actually. So that is a wonderful program to be a part of. And so I'm not going to talk too long, but I'll be open to questions a little later. But we are honored to be a part of this program, and want to thank Inclusiv, Kathy Mann, Monica, Andrea, the whole entire team for the work that you do. And I'll tell you, with these conferences, we've been a member for 17 years. And it is these conferences where we get revitalized to go back into our communities and do the work that we are all here to do. So I'll turn it over to the next panelist.
Thank you so much, Gregg. Next, we'll hear from Ms. Suzette Cowell from Toledo Urban. If you'd like to unmute your phone. Welcome, thank you for being here.
Thank you, and good afternoon. And thank you, Inclusiv, because Inclusiv has been with us, we just celebrated 25 years, and they have been with us. Actually, we started working with them before our charter. So they've been with us for 27 years, helping us. In July, was our 25th anniversary. We started it off in a church, and then we moved out into the community, and we've had some very good partners in our 25 years that are still at the table. We have over 4,700 members. Our asset size is 13 million. And we, in 2015, our local foundation actually built us a brand new branch. And it is located on the corner of Dorr in Detroit, which is the hub of the Central City community. And it was the first building that had been built in this community in a long, long time. So what that did was the community and the members that lived in the community, they were so excited that actually made our membership grow even more because they felt like we were here to stay and to take care of them and help them deal with the day-to-day issues that they deal with. Banks have been a part of our lives for the whole 25 years. When we got chartered, we were able to do loans right away because the banks put in a non-member deposit, and they didn't charge any interest on it. And then when we needed secondary capital because of our growth, also the banks put in a secondary capital deposit into our credit union. Our membership mostly is single men, believe it or not. We have a lot of single fathers who are trying to do the right thing. And so it's very, I say when they walk in the door, they receive hope. And someone asked me a question this morning, why do you think so many young men, because this is not what we hear out in the media, so why so many young men care about their financial? And I said, you know, I think that a lot of the men in our community have grown up in single family homes with their moms. And so us being an MDI, minority ran institution, mostly by women, I think that they feel comfortable. That's where the trust level comes in. So I think that's why and we don't do a lot of advertising, because up until when we received the CDFI grant, we didn't have funds to do a lot of marketing. Everything that we've done is pretty much word of mouth. When the auditors come in, they say that they've never seen a credit union with so much foot traffic. And a lot of people in our community still walk and ride bicycles to come and do their services. Another helpful person that has been very helpful with our credit union has been Congresswoman Marcy Kaptur. I could not even mention her. She was actually the reason why we went to become a community development credit union. And I believe that she's actually the one that showed us who Inclusiv was. So we are very, very thankful for her. One of the things that she has asked us to really look into was ATM. So at our branch, we were able to put in 2 ATMs, and literally we're going to have to put another ATM in because up until we got in this community with ATMs, the members were really paying high dollars, high costs for the ATM services. We are the only financial institution in our area. Pretty much everybody else has moved away. So I think that's another reason why we've been so successful. You know, we have applied for CDFI year after year after year after year, and we were a small credit union. But finally, last year we were awarded an award. And I tell my staff, one thing that we don't take no well. So we could continue to keep applying until someone says, yes, let's do this. So we thank the CDFI fund for helping us with that. And I know that we will definitely make a big difference in this community with that grant. The city of Toledo, like I said, they're one of our partners, and we just had a new partner came aboard, is ProMedica Healthcare, because they realize that individuals' financials, health helps them so they don't have to come to the doctor as much as they normally would come to the doctor. So we've been working together with ProMedica and also with Neighborhood Health Association. We went into their medical facility, and so that when they take an assessment on their clients that come through, and if they have financial issues, that they direct them to Toledo Urban. I can't say enough about Inclusiv. They have really, I'm telling you. And when you talk about going to the conferences, I didn't know, I know in the beginning, because I've been here since the beginning. The first conference that I attended, I was so happy. I got revived. I feel like I could really do this and make a difference. So I just cannot say enough about Inclusiv. And that's all I have to say.
Thank you so much, Suzette. We were able to bring in Mr. Barlow Flores. So I think we're going to try to let him have his time to make some remarks. We'll do Kimberly after. Barlow, are you able to unmute?
Yes, thank you, Monica. Can you all hear me okay?
Yes. Yes, you sound great.
Wonderful. Wonderful. Thank you so much. And I'm so pleased to be with you all this afternoon, and apologies for my technical difficulties. Seems like technology mishaps are more the norm now in this new landscape than not. So I apologize that you all can't see me face to face, but again, so excited to be here and to represent Citi in our partnership with Inclusiv. As we've heard this afternoon, many of you hail from institutions, even through the COVID pandemic, have continued to expand financial access and inclusion for individuals across the country, particularly in communities of color. And as I mentioned, again, my name is Barlow Flores, and I lead community relations for the Northeast region for Citi. At Citi, our mission is really to enable economic growth and progress, but we acknowledge that a single institution alone will not be able to reach everyone, and that's fine, so long as we're able to collaborate with the partners who can help us to do just that. And financial institutions of all sizes are needed to serve a broad spectrum of customers and client needs. We know that CDFIs play a vital role in expanding access to safe and affordable financial products and services to low-income communities and communities of color. I'll give you an example. As of June 2021, CDFI credit unions had issued more than 63,000 Paycheck Protection Program, known as PPP loans, for more than $2.6 billion, with an average loan size of about $41,000. And by partnering with Inclusiv in support of its CDFI and MDI members, Citi aims to combine our complementary strengths, global scale with local market expertise, community knowledge, and long-established relationships in order to serve communities in a more effective and targeted way than financial institutions of any size could do on their own. And Citi has partnered with Inclusiv for more than 12 years to support the growth of CDFIs as part of an intentional strategy for expanding financial inclusion. In partnership with Inclusiv, Citi has invested in seeding models that expand financial access for underserved BIPOC and immigrant communities. Our support is enabling Inclusiv to provide the technical assistance and resources that its member credit unions ultimately need to access capital through federal funding. If you'll indulge me, I'd like to highlight a few of our initiatives with Inclusiv. So the first is the Black Communities Initiative that started with the cohort of 22 credit unions in New York City and Chicago. And so you've heard of some of that from our panelists. The initiative aims to guide small minority-led credit unions in developing long-term goals and growth strategies, expanding product offerings, launching new marketing tools, increasing their field of membership, and raising growth capital. Now, the success of Black communities was documented in a report called Preserving and Growing Black Credit Unions, Inclusiv's Guide for Building Capacity and Providing Technical Assistance, released this past February. One of the original credit unions in the cohort is, of course, Southside Federal Credit Union, which we already heard from their wonderful CEO, Gregg. To create pathways for Spanish-speaking immigrant consumers, we have also supported Inclusiv's Juntos Avanzamos initiative. Now, this initiative links Hispanics and immigrants with over 100 credit unions that accept alternative forms of IDs and ITINs, offers flexible underwriting, providing ITIN loans, and employing bilingual, culturally competent staff. In New York City, where I'm based, Citi provided 3 credit unions that were part of the Inclusiv's Juntos Avanzamos initiative with support to help small businesses during COVID-19 access nearly $9 million in PPP loans. And in support of financial cooperatives in Puerto Rico, Citi has again partnered with Inclusiv on its Puerto Rico CDFI initiative, which has given cooperatives the tools and capacities to pursue certification and resources from the CDFI fund that bolster economic revitalization and ongoing disaster rebuilding. When this initiative started, none of the cooperatives in Puerto Rico were CDFI certified, and today we're proud to say that there are over 50. And I know in this session, we've discussed how credit unions have been playing a part in these initiatives, and I want to thank everyone for their commitment. Today, the communities we collectively serve are facing a new and sobering economic reality, in large part due to racial inequality and the COVID-19 pandemic. The Citi is playing a critical role as economies and communities begin to rebuild. We're one of the first banks to announce assistance measures for impacted customers and small businesses while participating in the U.S. Small Business Administration's PPP. Citi donated $50 million in proceeds from our participation in the PPP to the Citi Foundation, which deployed these proceeds to assist CDFIs and vulnerable small businesses. And back in July, the Citi Foundation announced $25 million in grants for 50 nonprofit organizations across the US that are actively providing technical assistance to small business owners of color to help them survive and grow in a post-COVID world. Now, in line with our commitment to inclusive access to capital, Citi recently announced Bridges Built by Citi, which is a digital lending platform that will expand access to capital for America's local businesses, while also helping local and community banks broaden their customer base. This all aligns with Citi's Action for Racial Equity, or ARE as we like to call it, which represents more than $1 billion in strategic programs to help close the racial wealth gap and increase economic mobility. Now, while we know that we are just at the beginning of this journey, we've already made major strides, including establishing new affordable housing investment program to increase capital to Black investment managers, and expanding our support for nonprofits working with communities of color. But most importantly, it's through partnerships that we together are stepping up to meet critical needs. So thank you again for joining today's session. We're all looking forward to hearing, more and more throughout this wonderful conference. We've heard great things from the panelists, and I'll turn it back over to Monica. Thank you.
Thank you, Barlow. Really appreciate it. I'm glad we were able to get you on the call. I wanted to then bring back Ms. Kimberly Nichols. Kimberly, can you tell us about your credit union and also some of the programs that you've been involved in, particularly those involving external funding?
I would. Hi, my name is Kimberly Nichols, and I am the CEO of Bridgeway Credit Union in Phoenix City, Alabama. We are around 15 million in assets, and our field of membership is Russell County, Alabama, and Muskogee County, Georgia, which that's a recent change. So we recently changed our name to Bridgeway Credit Union to better reflect that change. Our community is rural. It's about 45% minority and about 22% poverty. And so we saw a need. We became a CDFI in 2010. At that point, we wanted to take advantage of the Community Development Capital Initiative they had going at that time. So we were able to get secondary capital in order to grow the credit union. I was actually unaware of all of the other benefits at that time. I didn't realize there were going to be so many other open doors to help us grow and help us serve our community. So our credit union is actually, we're about 70% minority, and we saw a need. When we applied for our CDFI membership, we realized that there were over 60 predatory lenders in our city, which was about a 10-mile square range. That's a lot of predatory lending going on. We saw our members turning to that was the only alternative that they had. They didn't have any kind of traditional financial source that they could get to meet their needs. And so we wanted to do that. So once we became CDFI, we started looking at how we could serve the membership better. And so we started applying for grants. We actually started with NCUA. We got a lot of grants through NCUA that were able to provide products and services and pay for those things that as a small credit union, we couldn't provide to our membership because we just couldn't afford upfront costs a lot of time. And so we use that to be able to bring in so many more services like real-time debit cards that our members could use to know what their balance was all the time, and a nationwide ATM network, and instant issue debit cards and remote deposit capture, things that at that time traditionally credit unions our size weren't able to offer. So that was kind of the beginning of our adventure in getting some of those outside sources to help us. And then that moved into CDFI. And so it, along with Suzette, it took us several years. We applied for 4 years before we were able to actually receive any funding through CDFI, but we finally received in 2019. We got our first grant from them, and it has been a game changer for us. We've been able to broaden our lending. We've been able to grow. We've been able to take in new fields of membership and be able to expand our lending products to them so that they do have those alternative sources. we are able to offer so many things for free. We don't have to charge fees and that sort of thing because we're able to offset the cost of these things. And so far, we've been able to receive almost $3 million since 2019. So once that door opened, we've been able to keep accessing that. And so it really helped us last year during the pandemic. We were able to do a program where we were just able to forgive loan payments. We were able to provide gift cards to our members just to pay for those things that they needed while they were out of work. We were able to participate in the PPP lending program and help our members with their businesses. So it's opened a lot of doors for us. I also, along with everyone else, want to sing the praises of Inclusiv. They are so helpful all the time. They're helpful with certification. They're helpful with renewal and reporting. They're helpful with just questions and ideas, bouncing things off of them. They're a tremendous resource when you need questions answered in this arena. So I highly recommend using them for that. And I appreciate the time to be here today. Thank you.
Thank you so much, Kimberly. Thank you for telling us about your credit union. We are heading into a Q&A with the panelists. So again, we have, you're welcome to type in your questions for Gregg Brown from Southside, for Suzette Cowell, Toledo Urban, or Kimberly Nichols at Bridgeway. But we have a few questions that we have lined up. So one is for Gregg. I'll kick it off. Gregg, are there any particular partnerships that have been particularly helpful to you and your credit union? And if so, can you describe how those relationships came about? I know that you mentioned some with Citi, but there are also different initiatives that you have.
I mentioned a little earlier about a partnership that we have with the Faith-Based Credit Union Alliance. What we've found is that when credit unions unite, we're able to access services for the group at a more affordable rate. For example, this is a group out of Chicago, and working with the Illinois Credit Union League, we were able to all sign on to the same data processor and get substantially lower rates on data processing services. So and then so that's within the industry. We are financial cooperatives, and to the extent that we can figure out how to collaborate and work together in ways that are beneficial for all of our individual credit unions. So we've had some success there. So partnerships, they vary because in any partnership, you kind of always want to do what you do and allow your partner to do what they do. But there's this area of congruency, that when we do it together, we can offer more services to the community. And so we have a number of organizations that here in Chicago that are doing tremendous work where they can offer the credit union services to their clients because you get better rates and better deals. And given the climate of the country, it just makes so much more sense to see how we can work together to build a stronger economic infrastructure at the community level, where we can kind of keep funds circulating locally, investing in businesses and housing to help people to create more assets. And so nonprofit organizations that are in business to satisfy the needs of the community as well, when they have relationships with us, now it has a direct impact in transforming our local economy. And so yeah, so it varies from organization to organization. But just want to say how we support partnerships all the way around, because that's what makes the community a community. None of us work in isolation.
Suzette, are there any particular partnerships that you want to share that come to mind? I was intrigued when I spoke to one of your colleagues at Toledo Urban, and she mentioned that you were able to work with regarding the PPP program. And at that time, it was sort of you were getting referrals from some of the bank partners, I think, in terms of the business loans.
Yes, we've always had a strong relationship with the banks. Like I said, they pretty much have been here from day one. And with the PPP loans, when that happened where things changed, they referred their customers to us to apply for the PPP loans. And that's because we have, like I said, strong relationships. One of the other ones that we have is with the city of Toledo. We have a mortgage program, and they have down payment assistance. And that has really worked out for our membership. They do down payment assistance up to $9,500. So a lot of our members have benefited from that program. I think one thing I forgot to mention too, Ohio Credit Union League. Ohio Credit Union League has been there for us also from the beginning. Our newest relationship is with ProMedica Health Systems, and I'm really excited about that. And also last week, Liz, who works very closely with ProMedica Health Systems, so it looks like we're going to form some type of partnership that's probably going to be very beneficial to our membership.
Yeah, do you want to share anything on the partnership front down in your area?
I would. We have two that I'd like to highlight. The first one is with a local veterans association. And what we're doing for them, we're doing business readiness programs and loans. And so these veterans that are coming back from deployment and they're wanting to start businesses and they've been gone for so long, we work with them. We help them with their credit. We do financial education, and then we do a business readiness loan product that will help them if they need startup capital, if they need, maybe to clean up some of their credit, those kind of things. We're able to do that for them so that they can get those businesses started and be, independent entrepreneurs like they want to be. So that's been one we're really excited about. And then another is with a local bank that we also were working with their mortgage lending program, to where when they have some people that they may not be able to get through for a mortgage for whatever reason, we are able to help them. So they'll send those people here, and we will do the same thing. We will put them through our financial education. We will help them understand their credit and repair the things that they need to repair so that they can become homeowners. So those are the two things that have been really successful recently that we're really proud of. So those partners are looking to us to kind of help people that they're not quite there yet. And so we're able to bring those programs into play to help them get into those businesses and get into those homes. So that's a really good thing.
I was going to add, can you hear me?
Yes.
Oh, I was just going to add one partnership we have is with Bank of America, similar to what Kimberly just said, how because we do housing counseling, we have a program with them that when we counsel folks who are seeking to get a mortgage with them, they will basically pay us, about $300 for everybody that we counsel that goes through their program. And then we had a partnership with First Midwest Bank, where at the time, or like right now, we had lent out as much as we could lend in real estate loans. So we had a moratorium on lending and still do. So During that period, we had a relationship with First Midwest where they would come in, we'd have a mortgage day where they would sit down with our members and discuss how to get a mortgage. And of course, if they wanted to do business with them, that they could. But as a part of an entire package for support of the credit union, that kind of worked because, we were still building capacity to get it to the point where we can do our own in-house loans. And that's what we're moving toward. But during the interim, it was a good service to our members so that they would have access to mortgage loan products that we currently don't offer. And relationship enabled us to, build our capacity to be able to reinstitute our own program.
Thank you for sharing that, Greg.
Mm-hmm.
I do want to just let people know you can type your questions if you have them for any of the speakers. We welcome them. Feel free. We can even unmute you if you want to ask directly to make it a little bit more interactive. But because the focus of this conference has been heavily about this being the year of the CDFI fund and the importance of those funds coming down the pike for credit unions, and somebody mentioned and used the word like, catalytic capital, transformational capital. I wanted to spend a little time on just the kind of like the before period, as well as like, now that you are a grantee. So, maybe we'll start with some case making questions. Like, what concerns did you have before applying for CDFI certification? And what were sort of any sort of like pushbacks or concerns coming from the board, if anybody can share about that early stage, like, before. And I was like particularly curious, Kim, when you mentioned it took you guys 4 years to get it. Like, what were some of what was causing those delays and problems?
Well, I think there's a huge learning curve just to the grant application process and what they're looking for. And that's why resources like Inclusiv are so important, because trying to figure all that out yourself and trying to learn to write these grants, it's a huge undertaking. I remember the first year submitting my grant, and it's due at midnight. I was literally pushing the submit button at 11:59. It took me that long to get it together, and that was after months and months of hard work. And so partnering with people that can help you is really, really important. So I think that was a big part of our delay, was trying to do it all ourselves, and not being quite sure what they were looking for, quite sure what we were after. Because a huge thing that we want to do, as I was talking about the veterans, we really wanted to help small businesses, which again is something that's uncommon for our size to do business accounts and business loans. And that's something we've been able to do successfully. And so once we started zeroing in on trying to help the local business owners and help minorities that wanted to be entrepreneurs and that kind of thing, that's when we really started to see success. So knowing what you want to do, what you want to accomplish is really important. And then partnering with the people that can help you get there. No need to reinvent the wheel. And so trying to do it all yourself. And I didn't know that at the time. And I think that was a big hindrance. And so things like this conference and hearing people share will let you know that the help is out there, and that you can get what you need without trying to do it all yourself. So I think that's a really, really important thing to say.
Yeah, so at the Southside initially, well, we always had a board buy-in for CDFI, just knowing the value of it. But it was also just not having personnel dedicated to submitting the application. And, I know some of the, some CDFIs, they spend a lot of money to get the application written. And we didn't, it wasn't in our budget to do that. So initially we had some AmeriCorps Vista volunteers that had backgrounds in journalism. And so they did all the research and got us our initial grant. And that was about in 2008. So we got about close to 600,000 early on. And then there was a period where we submitted several CDFI grants and were not approved. And it can be a little discouraging. And recently, you know, we had somehow let our recertification lapse. So we had to get recertified. And fortunately, we had the support of Inclusiv. Terry Radigan came through and helped us do the streamlined application with NCUA. And then Jen Thompson called and said, Gregg, did you submit your CDFI RP grant? I said, not yet. I was planning on working on it today. But, you know, with these smaller credit unions, you wear so many hats that, you know, grant writing, as important as it is, sometimes it's hard to pull away just to focus on that. So she was very helpful in getting that grant submitted. And so if you're there, Jen, thank you so much. But that's a testament of the support that Inclusiv provides its credit unions.
Thanks, Gregg. And Suzette, I was wondering if you could share a little bit about, to give people some sort of like a more concrete sense of, so one of the grants, you know, on the CDFI fund side, you have the technical assistance grant that is approximately $125,000, or then you can apply for the financial assistance grant. So I wondered if you could say a little bit about what did you do with your first TA grant from the CDFI fund? Like, you know, kind of, again, putting it into sort of make it a little more concrete for people. Like, what can $125,000 do for a small credit union?
Well, first we fainted because we had not received that was our first grant that we received from CDFI. So then when we recovered, we looked into, there was some staffing that we need to address because during that time when we got that grant, our growth, we really grew. A lot of it was because of what happened with George Floyd. I don't know if anybody else experienced that, but that seemed to really grow our credit union. So we had to get some, look at some of the services that we offered and try to bring them more up to speed. Like I said, and working with getting some more staffing to help us take care of our membership.
I know we use one of our CDFI grants to hire a mortgage loan officer. And, you know, to me, is with community development credit unions, you know, we got to get it to the point where we're helping families to create and retain assets. And so the CDFI grant enabled us to start offering mortgage loans. It's just that, like I said, we lent out as much as we could lend out in real estate loan before the regulator said, well, you know, too much of your loan portfolio is in mortgage loans, so you have to pull back on doing those. But now we're ready to do it again. So we have a strategic planning meeting coming up next week. So hopefully, you know, the board and our team can get on the same page and really help our community to grow, you know, so looking forward to that.
Well, I see some follow-up questions. And I know Carl Wyndham, I see your question too. So we will circle back in just a second. But one question was about Suzette. What was the growth in new members when you had that instance where, you know, with the racial reckoning and the George Floyd situation, how much did your membership increase? We
usually opened about 35 new members a month. And then when that situation happened with George Floyd, we were up 90 new members a month coming in. It was a lot of seasoned seasoned members that felt like they needed to do the right thing. We had new members that their children had told them to come and join Toledo Urban. We got a lot of phone calls also from all over when that was going on. So it really, 90 new members a month, that's kind of a lot for us. Yes, and they wanted to move all their products here. Everything that they had at the other institutions, they wanted to move here.
So Carl's question to the group, he's saying, what would you say is the best approach when you're seeking partners, I guess for the first time, like if you're trying to approach a new partner? It sounds like you guys have built up these relationships. And so if you could talk through maybe a specific example, anyone want to take that? Like the veterans program or anything that you want to.
Well, that one's kind of funny because he came to us and sought us out, but part of that's having the community know what you're doing. When the community is aware of what you're doing, they'll come to you, and if they know that you're willing to help and you've helped in the past, they are not afraid to ask. So being approachable on your own part is a good thing. And then even with the mortgage lender, that was something that just kind of came about organically through other relationships, speaking about what we're doing and sparking an interest in being able to help them. So the relationships we have kind of evolved like that, coming out of other relationships and other conversations. Better Business Bureau, Chamber of Commerce breakfasts, those kind of things, are really easy ways to approach people. And then when you've got something good, you can feel proud to talk about it. And so when you see someone you want to partner with, that makes it really easy because you have something good to offer and you can let them know what you're there to do and who you can help and how it will benefit them. And when you let them know that, also they're usually quite willing to partner.
Gregg or Suzette, before I.
Yes, we have a like there's sometimes it's when people find out about the work, they want to see how they can get involved and help it to grow. So it's just a matter of kind of listening and seeing what role they can play. Like recently, I was approached by a local community organizer who has some wonderful ideas of some things that I would like to see our credit union do. And a lot younger than me, and just kind of looking at succession of leadership and finding ways to open up the credit union to be more welcoming to that demographic. And I'm kind of looking forward to that, having that conversation, particularly as we go into our strategic planning session. But sometimes you have to look at rebranding. Approach to growth sometimes is putting a new face on the work, because people are aware of it, but what has prevented them from getting involved in the past? Here, because of all the social unrest, people found out about us and said, well, we want to take all of our money out of Chase and put it into the credit union. And so this presents us now with the opportunity to have the conversation about, well, we want your deposit. However, we also have all these loans too that you could get. So, because if we just continue to take in deposits and we aren't deploying capital at the rate that we're taking those deposits in, it lowers our net worth. So I think for people who really want to partner in a way to bring about change and do things that are transformative in our communities, we're now in a position to educate people on how to do that through our financial institutions, which is something that hasn't been the case in a while, where there was that openness, because you have a freedom of choice to where you want to save. but I always believe that where you save is who you save. You know, because like the money works, you know, while we're sleeping. So let's figure out how to get those resources at the local level to help the people who need the help the most.
Yeah, I always love that when you say that, where you save is who you save.
Yeah.
We're heading to, we're almost at time. So I just wanted to ask the group if anybody wants to take this one, but the question is, what is the benefit of being a small MDI? Like what are, you know, if somebody were to say, what is actually like a positive part about being a small MDI credit union in your community?
Well, I think that right now, with the focus on diversity, equity, and inclusion, there's a greater effort to ensure that MDIs play a significant role in our economies. So, and in terms of resources, for example, the federal grant funding for the emergency capital investment program, you know, that's geared towards MDIs, and so that's beneficial. It's, you know, all these certifications, you know, speak to our society changing in a way to be more inclusive, and it really boils down to just care, you know. So we care about just these types of financial institutions. So we want to make sure that we help to empower them. So, I mean, we are, you know, a diverse country, but poverty is what we want to continue to eradicate to the best of our ability through the work that we do. So, you know, all businesses are in business to make a profit, but the ones that stand out are the ones that are in business to make a difference. And that speaks to what we are. So whatever certifications, MDI, CDFI, LICU, CDCU, you know, it speaks to the mission of the work. And yeah, so if it'll help us to better do what we do to help others, that's always a positive.
Yeah, I think that if you're asking for a benefit of being small, I think that one is like we are viewed maybe as a little bit more trustworthy sometimes. You know, they've seen larger institutions, you know, take advantage in things that you don't see a lot of in the smaller institutions. So I think that can be a benefit is that you're looked at as trustworthy.
Thank you so much. You guys have been a really wonderful panel of stellar CEOs doing wonderful things in each of your respective communities. So thank you for all of your hard work and leading your teams. Thank you for being our speakers today. Thank you to Citi for your remarks, Barlow. Really appreciate it for you not only, you know, being here today, but also being a funder that's been supportive of our work and the work of the CDCUs. I just want to send a reminder to everybody that we are heading into our final session of the day, final session of the conference. Closing is going to be great, so please don't miss it. It starts at 3:30 Eastern time. And thank you again for everybody for attending today's session.
Thank you, Monica.
Thank you.
Thank you,
Bye,
everyone.
guys.
It was a pleasure.